Thank you for tuning in to the Crystal Clear Finances YouTube channel. We're glad that you're here. If you enjoy what you hear, then give us a thumbs up and subscribe so you can always receive our new content and that you can have confidence for every financial decision. Enjoy. Welcome to Crystal Clear Finances, where we understand finances can be confusing, but you don't have to face it alone, and you can have confidence for every financial decision. My name is Crystal Langdon, certified financial planner and founder here at Crystal Clear Finances, and I'm excited that you're here with me today. I think we took some time last week to hopefully put everyone at peace, to take a deep breath and realize, yes, you are correct. The stock market is bumpy. In fact, as we've talked about over the past few months, the stock market's probably going to continue to be bumpy all year long. And that's why it's so important to understand what you're invested in and why. We spent some time last week, and if that's something that's of concern to you, please make sure you're giving our office a call at 518-433-7181, and we will sit down with you and literally, just like we did last week, go line by line to see where you need to be and if what you have is what you need. Now, today, what I want to talk about is another concern. This seems to be March Madness month where I'm dealing with the things that just drive you crazy. And one of the things that we're seeing is inflation. There's a lot of talk about it. I mean, at first we sort of noticed it, but my word, you can't go anywhere. You can't fill up your gas tank, go to the grocery store, go to Home Depots or Lowe's. You can't do anything without noticing that prices have continued to climb at an accelerating speed. So what do we do with it? That seems to be the million-dollar question of how do I plan for inflation? So why don't we take time today and let's talk about 4 key ways that our office here at Crystal Clear Finances is helping our clients prepare for inflation. Now, I want you to understand, as I share these things today, it's not that all of a sudden we thought, gee, this would be a great idea. Why don't we start planning for inflation? We have been planning and positioning our clients all along so that they're ready when they face the things that are coming across in this world today, like inflation. So let's talk first of all about one of the things that you can do to help come against inflation, to keep up with it. Well, the first one is investments. You want to make sure that you are invested so that you can keep up with the cost of living, to keep up with inflation. You might say, how does putting money in an investment help me keep up with inflation? Well, let's think about it. What is the stock market? Let's go back to the basics, right? Doesn't it give you a report of companies that are out there? And when you invest, what are you doing? You're buying companies. That's literally in a nutshell what you're doing, right? We talked about that even on our values-based timeless truth financial planning seminar that we did earlier this week. We talked about the fact that you buy companies which give them money so that they can increase their influence and change the community's culture. They change the culture in your community, in your state, and in our nation. So when you're investing, you want to choose companies that are in alignment with your beliefs, and you want to choose companies, right, that have a product that they can increase the price on so that when people are out there and they need a product, they go to the company you own, they buy some of the goods from the company you own, and then the company is profitable, and then your share price is profitable. That's what you're doing. When we put money in the stock market, we have to understand it's all about choosing the right companies you want to invest in. I like the fact of knowing that my clients have significant holdings in companies, even though they're down now. Now, listen, this is such an aha moment. If we know that we need to buy companies so that we have those share prices of the companies, and when the companies are going to increase their prices on their goods, we will profit from them in most times, then why don't we use this opportunity right now where they are predicting for this whole year that we're going to have a bumpy year? why in the world aren't we going in and snagging up those companies at a lower price? But emotionally what happens is we think, well, when the stock market's good, I feel at peace. Now I'm going to invest. When the stock market is down, we want to look for quality companies, and that's where your financial advisor, and that's what we do here at Crystal Clear Finances. We're able to analyze and say, hey, these are the type of companies you should own. And when you can purchase those at a sale price, then, and of course, I know for compliance purposes, I must say we cannot guarantee future performance. Past performance doesn't guarantee future performance. But if that stock, which was a quality company, was to rise in the future and the stock market goes up, you literally were able to buy it on sale. It could be so much as you could buy something for $20 a share that's normally trading at $50. Why wouldn't you do that? Now you're getting more than 2 shares for the price of what you used to pay for 1. Right now, understanding what's happening in the stock market and the politicalness to it, the taxes, what's happening overseas, this monetary, how they're shifting things, we've got to be prepared for inflation, for prices to go up. And that is why you hear me talking consistently, understanding what you own, why you own it, and getting those core pieces in your portfolio. So when you're working with Crystal Clear Finances, one of the number one things that we will do to help you prepare for inflation is we are going to position you in stocks, dividend-paying stocks. Now, some of them are going to be growth-oriented. Some will be value-oriented. Some will be balanced. But we want to have those companies that have a product or a service that we believe this country is going to use going forward. Any company that has a product or service that we think that's outdated, Sears, like different things, right? Different companies, we want to make sure they're taken out of your portfolio so you only have the companies that are offering products and services that they continue to raise their price on so that you continue to prosper along with the company. One of the other areas that we look in that is we look to make sure the stocks that we invest in have dividends, that they will pay you every year. Want to make sure that we all understand when it comes to stocks. Remember, you make money 2 ways. Most of the people, when they say, I can make money on stocks, they think about the fact that they can buy it for $20 and it goes back up to $50. And they're like, woohoo, I made $30. And if they bought 100 shares or 1,000 shares, okay, it makes it kind of exciting. But the other way that you can make money, which is very helpful when the stock market's down and it's not so fun looking at your share price, is through the dividends that the companies will pay out. There are companies that have said, I'm kind of big enough. I don't need to keep reinvesting every penny I make from all the products and services I provide. I can reinvest it into my shareholders. I can give them a piece of it, and they begin to pay dividends out. They don't have to absorb it all. So we want to make sure that in your portfolio, as we're getting ready for inflation, we have dividend-paying stocks, we have growth stocks, we have value stocks, we have mid-cap, small-cap, large-cap, depending upon what's needed. But one of the things we're doing is analyzing what is it providing. And if our country needs it, then that can be something where we can combat inflation. So now let's go to the next one. But before we do, let me just make one comment here, and then we'll take a quick 30-second break. I want to make a comment in regards to the fact that when you buy these companies, I know you hear me talk about this a lot, but understand whatever you choose to put your money in will influence the culture. Work with an advisor who can reflect your beliefs in what you purchase and prepare you for inflation. And we'll be back in just 30 seconds with more Crystal Clear Finances. And we're back with more Crystal Clear Finances. My name is Crystal Langdon, and today we are talking about the steps that we take at the Crystal Clear Finances office to help our clients get ready for inflation because, ta-da, it's here. And so we have been preparing for years, walking our clients, setting things in place so that when years like this year happen, they aren't calling. The phone's not ringing off the hook because they know, hey, first of all, we put money to the side of the market. It's out of the market. It's growing for us. So they can touch it if they need it. We've set it up where they have income streams that are coming in. And then we let the stock market be what the stock market needs to be. Really, it's a hedge for inflation. You know, sometimes people look at the stock market and they have a misunderstanding. They think the stock market is what makes everyone rich. No, the stock market is supposed to increase your dollar to keep up with inflation, right? It's supposed to bring you some growth. But we work with a lot of our clients so we can create growth in the stock market so that we can take it out at a high and go invest in another opportunity. We have individuals who last year, and if you're my clients listening, you know I gave you a call that said, we've had some really good growth in the last few years. I think it's time to take that growth out of the market. And you've talked about real estate. You've talked about how you wanted to start your own business. You've talked about doing an Airbnb and you need a second home. Let's begin to pursue these avenues. And I'm so glad that I did because we were able to capture all those growth, all that high, and help our clients go into the next step. And that's what you should be doing and looking at with your advisor. Now, before the break, I talked about the fact that one of the things that we do to help our clients to combat inflation, to keep up with the cost of living, is we help them invest in the stock market. You've heard me say before, that doesn't mean bonds. There's a different avenue that we use for safe money. I can never correlate the stock market and the word safe. So when people say, I'd like to invest in the stock market, but I just want to do it safely, then what we need to do is take the money you want safe and we put it over here in the green tank, and then we go to the investments in the yellow tank in the stock market and we say, okay, now we'll invest these here for growth and we're going to keep the safe money over here growing between 3 and 5%. Now, let's talk about what is the second way that we look at when it comes to, hey, how do I prepare for inflation? How do I make sure I'm keeping up with the cost of living? Well, the second way is starting that green tank. Now, we've talked about this before, but for those of you who may be new to my YouTube channel or those of you who are joining me on our radio stations, all the towers that we're on, I want to encourage you. We have talked for years. And when the market is good, nobody wants to hear about a green tank. Nobody wants to hear about 3 to 5%. It's just not fun when you can have 20%. And this becomes the savings vehicle that no one wants to talk about. But thankfully, the clients at Crystal Clear Finances, you know exactly what I'm talking about because we have worked diligently to put a green tank in place of savings that can generate 3 to 5% of tax-free income. How much would you have to make in a taxable account, and how much risk would you have to take to be in the market to get the same thing? When we put money into a green tank, how does that help us with inflation? Well, it's growing the money consistently year over year, uninterrupted compounding interest working for you. Kind of like you have your own credit card working for you. Isn't that what credit card companies do, right? You have to pay them and they just keep compounding the interest that you owe. Well, why don't you make your own source of income and make that compound interest? The problem that people have if they don't understand how to use this correctly is they say, well, if I put my money in there, well, that's great. I have that over there, but how does that actually help me when I have to buy things? Understand, there is a whole strategy that allows you to use that money in there as collateral capacity. I know, fancy word. What does that mean? It means that you're able to say, Crystal Clear Finances, help me create a tank full of money, whether it's $50,000, $150,000, $1 million, that you can use when you go and you need to use money and you don't want to use your own. If you can say, well, gee, I will use my own money, right? We talked about this a couple weeks before about how you finance everything you buy. You either pay it with your own money and lose the right to gain interest, or you pay someone else interest. I don't mind paying someone else interest. If I can look at my money that's sitting in the green tank that's growing at 3 to 5% tax-free, uninterrupted compounding interest, because I can now take that money, use someone else's money, and I can go invest in an opportunity, start another business. I can buy real estate when the real estate market starts calming down and coming back down and people are getting realistic about the prices. Having both in place is so crucial because your green tank savings protects your yellow tanks. And it also helps you walk confidently through all the inflation that's happening. Now let's go to the next area. What would be another area where we can help when we're looking at keeping up with inflation? Well, one of the things we do is we look at all your income streams. You know, there's been many discussions about when is it better to take Social Security. Do I take it at 62? Do I take it at 67? Do I take it at 70? That is one of the reasons why I like using the software that we have here at the office, because we literally can run scenarios. We can tell you exactly, okay, well, within a few dollars, how much would you receive overall if you started your withdrawals at 62 and you lived till this certain age? How much would you receive at age 67 or 70? And being able to know what's right for you and what's right for your spouse when it comes to choosing Social Security can literally be the difference of hundreds of thousands of dollars that you and your loved one could receive. So you need to make sure that you're making the right choice when it comes to Social Security. Now, we have a case that we're working on right now where the person retired. Well, I almost said the name, but I didn't. Thank you, Lord. So where the individual is retiring, and we have chosen, in their case, not to take Social Security right away for that individual. We have another income stream that's coming in and meeting their needs, and we're bumping their Social Security till they're age 70. Now, we don't do this with everyone. Everyone is different what they need, but we need to remember that from your full retirement age until age 70, whether your full retirement age is 66, or for most people now it's 67 and above, but let's say it's 67, you're going to get 8% on your Social Security each year you wait before you take it. So when we are looking at creating maximum efficient income streams, we are going to be very alert to what we can do with the Social Security. And I know there is a whole debate out there. Will Social Security be there? Will Social Security not be there? I am happy to go through all those discussions with you in our office. I know that there is no president that wants to be the one that killed Social Security, even though it's eking along. I think in some way, shape, or form, there will be some form of Social Security. I think it's going to look a lot different than what we're used to seeing today. But there'll be something there, and I want to see when I have my younger clients, when they get to age 67, are they even going to get the 8%? I don't know, but right now they do offer that. So when we're looking with our clients and we want to help them with inflation, number one thing, going back to the beginning, we said we want them to buy stocks. Buy dividend-paying companies that can be able to raise their prices on their services, raise their prices on their product. The company profits, you profit. So we want to do that. We also said that we need to have a green tank. Savings, let me put it simply, savings that grows at 3 to 5% every year, tax-free, compounding, that you can use as leverage and say, I have an opportunity over there. That real estate that I've been wanting to get is finally available. You can pull it from there. You can leverage it. But one of the things we understand is we run the numbers to make sure there's always a good spread so that you have the resources coming in, that you can afford it, and that you never get in over your head. We want to make sure that you understand this is a savings vehicle that will allow your money to keep up with inflation and allow you to experience the ability to meet opportunities and the expenses of life. And then what was the third way? Well, the third way that we talked about is maximizing your income sources. So one of those ways is going to be Social Security. The second way of maximizing it is your pension. Now I'm going to talk slowly now. I know I tend to talk pretty fast. But this is something that I see all the time. And I really, if you don't take anything from this program today, understand this. Many people have been told, hey, when you take your pension, take the most that you can because it will cover your life, and then take out a life insurance policy and make up the difference for your spouse. I have yet to see that really work. And I have been a certified financial planner, a fiduciary for over 24 years. What I have seen, what I have a case right now in my office, is a client coming in 15 years older than his wife, having a pension where he said, give me the largest amount, I'll buy a $200,000 life insurance policy on me, and when I die, all my pension goes away, all her Social Security goes away because he had the larger one, and you only get to keep one Social Security. So now she's down to just that one Social Security and $200,000. Is $200,000 in this day and age going to last someone for more than 5 years or 10 years? She has a long life ahead of her, but somebody sold that man a life insurance policy for $200,000 and told him to take the highest payout on his pension. And now I'm going to be the one to walk his widow, when it happens, through the course of her life, helping her find the best way to survive. So men or women, anyone who has a pension, you need to sit down with your financial advisor, or you can sit down with us here at Crystal Clear Finances, whichever one you're more comfortable with. At this point, it doesn't matter to me as long as you get good, godly advice that shows you which option. Because the options that you usually have is one, where you get the pension, you get the full payout, right? And it just pays you every month for as long as you live. And when you die, even if it's a week after you started taking the pension, the company gets to keep all the rest. I got a problem with that. Now, there's another one that says, well, wait a minute. Why don't we have it where we'll reduce it by 75% or we'll reduce it in half? And this way, I'll take half of what my pension is now, and I know that that will be the amount that carries even when I die. My wife will still get it. There's other times, and we won't go too far into detail, but there are things called term certain. And you probably have seen this on your pensions, where it says 10 years certain. All that's saying is, I'm going to give you the biggest payout, and for 10 years, even if you die in that 10-year period, I'll keep paying it out. But on 10 years and 1 day, the payment stops, and the company keeps the rest of the pension, not your loved ones. So I would encourage you, as we're looking for ways that we want to make sure that we are keeping up with inflation and doing everything possible, maximizing, understand how to maximize your income is going to be critical for your future. So we talked Social Security. We talked pension. Now here's another one with the pension. With the pension, can you please check the strength of the company? I think GE has given us a great example. The giant that we said that could never fall. And I have had many people sitting in my office who have inherited GE stock that says, what do I do with this? And yet it was a prized possession for many individuals. So if you decide that you are going to do a pension, instead of rolling it all out to an IRA where we help people roll it into an IRA and then we manage it here for them and they have access to it, the whole thing, if you decide to keep the pension as a lump sum, check the strength of the company. We don't want them defaulting. We don't want them changing. And you say, oh, that would never happen. Au contraire. I know loved ones that I have right now who are on a pension that have gotten a notice that says, hey, in just a year or two, 50% of your pension is gone and we're reducing you by 50%. What do you do when you're 85, 90 years old? You're not going to go out and get a job and they told you they're just going to cut your pension in half. Look to make sure who's ever managing it, you got to have a lot of faith. If not, then what you can do is say, I'm going to roll it over to my own IRA and then work with a financial advisor like those of us here at Crystal Clear Finances. I'm a certified financial planner and a fiduciary where we can properly position so that it's invested in a way that you understand what you own and why you own it and you're keeping up with inflation. So the third way that under the income, right, because we said that buying stocks was one way to help with inflation, making sure that you had savings that's actually growing between 3 to 5% and is available for opportunities is another way. And then the third way, we said maximizing the income through Social Security, through pension. The last way is through asset-backed annuities, which you're able to say, you know, I worked really hard and I made this huge big 401k. But I'm concerned because if I just take 5% off of it on my own and the market goes down like it is this year, I might not be able to have enough money. I might run out of funds before I run out of retirement. And that's where we help and work with individuals where they can take that lump sum, put it into an insurance product that guarantees them an income stream for life. And that's something that we would sit down one-on-one with each individual to decide what's right, because many times we do not like to see 100% of proceeds going into that insurance vehicle because we want you to have liquidity. There are some things to look for on it. So it's a good way to create an income stream, but it must be done properly. Everything that I've talked about today needs to be implemented correctly. Otherwise, individuals get hurt. So the last one, because I know that we're running out of time, looks like we only have about 3 to 4 minutes left, as I want to talk about the fact that real estate. Now, I'm going to throw this out there, and you may have loved me all the way up through the program. You were getting ready to call 518-433-7181, scheduling your free initial appointment with me, and now I say this. I would encourage you, even though I'm about to share this, give us a call, because we want to sit down to see what's right for you. I want you to think about where your mortgage is now. I want you to think about, look what's going on in the economy. Is it time to sell your house at a high while people are still overpaying for houses and they can still get a semi-affordable mortgage? The interest rates haven't gone up. Or are you going to wait until 5 years from now, and what will the interest rates on a mortgage be? Now, I'm old enough that I remember my first mortgage was at 12%. I know. Those who are watching and recording me from our YouTube channel are probably thinking, what? Somebody paid 12% for their mortgage? All day long. And we were so super excited. That was a great rate. Well, what if we go back there? Then how much house can people really buy? So one of the things that I want to just kind of briefly touch on, and then we need to close, is I'd love to have a discussion, to sit down and talk to you. What are you doing about your mortgage? You know, people are overpaying on their premium back to the bank on their mortgage. Understand this. The bank has agreed to accept your payment, and the interest you will pay is 3%. 5 years, or whatever percent it is, 5 years from now, whatever you're paying them, they're still willing to take that little piece. And people say, but I end up paying so much interest. Yes, but if we can take the difference and put it someplace that makes you more interest and that you have in control, there's where we can really help. We have individuals that take 30-year mortgages and pay them off quicker than a 15-year mortgage. You heard me right. They start with a 30-year mortgage, and in working together at year 14 in like 2 months or 14 in 6 months, they are able to have the resources to pay off the mortgage, and they had less stress than if they did a 15-year mortgage and their back was against the wall. These are the ways, as we close: investments, maximizing income sources, setting up a savings that actually grows for you, and talking about how you're doing your real estate and your mortgage payments is something that we talk about all the time at Crystal Clear Finances. These are just 4 of the ways that we're helping them, our clients, face inflation. So I encourage you to give us a call, 518-433-7181, and visit us again next week as we continue to provide financial clarity so that you can have confidence for every financial decision. Thank you, and God bless. Thank you for watching the Crystal Clear Finances YouTube channel. If you enjoyed this program, then give us a thumbs up and make sure you subscribe so you never miss an episode. And if you'd like to meet with one of our financial advisors, feel free to give us a call at 518-433-7181 and gain confidence for every financial decision. Thank you, and God bless.